You're watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everybody. Welcome to Master Trader Live. Today, we're going to be talking about candlestick patterns. It's one of the favorite topics that everybody loves to talk about because it's about price action. And it's price action that we trade. As I like to say, we don't trade indicators. We don't trade squiggly lines. We don't trade lines that we connect dots into the future. But we trade price patterns. And we view them in a candlestick format. Why? What's the magic, if you will, behind candlestick patterns? In reality, there's no magic. It's just that they represent to us pictures in a clearer format. We can use bar charts. And it's like anything else that, if we can help speed up the analysis, to bring clarity to what we're doing faster, especially on an intraday basis, and read their messages objectively, why not? Why not? So, as we do that and we start to look at that from the point of view of what is this communicating to me about what other traders are doing? What are they thinking? What are they feeling? And of course, what are they likely to do? And looking at it from that point of view versus calling them haram eyes and dark cloud covers and thinking that, this pattern is supposed to have a greater probability of following through than another, it's very subjective and misleading because unless you combine other concepts, which is what we're going to talk about here today, right? A dark cloud cover might not mean much. It actually might be confirmation of your bias. So there's a lot deeper thoughts that we could bring to candlesticks than just what the textbooks would bring. So with that being said, let's do it, Dan.
All right. Good to go. Good afternoon, everyone. Greg, we've been doing this, 2.5, 3 years, whatever, but we give so much amazing information in this power-packed 1 hour. And as you said, this is going to be another beautiful one. You got the mute. All right, thanks. This is our approach. There's many ways to skin the cat for success in the financial markets, as I say. And as long as you are consistently and objectively profitable and successful with proper money management, then I say you have a good system. This is our approach. You are going to, every time you hear Greg and me talk about a chart, you're going to hear us talking about these concepts because the concepts combined is what makes up our method. And once you have what I call the conscious competence, which is taken one of our seminars, of course, then once you get the seasoning, you'll be able to incorporate these concepts instantaneously. I mean, Greg and I, in 1/8 of a second, as soon as our charts populate, we say it's a no-brainer. And so we'll go slowly now. Price is king. Everything else is secondary. And that's today, the price is king and candlestick analysis. These two are our focus in today's session. Then we want to take that picture and apply these other concepts. Where is it? What trends is it in? Are you buying a pullback in an uptrend? Are you doing a reversal pattern? Whatever. Multiple time frame analysis will show you support and resistance. Volume, we say, is secondary. We will trade price is king and candlestick without caring two hoots about volume, provided it's minimum volume. I mean, some people say, oh, Greg, that was a breakout on low volume. Well, who cares? So demand is greater than supply. It's breaking out.
Dan, those comments are common and normal because there's so much attention paid to things other than what's ultimately what we need to pay attention to, which is price. And so over the years, I mean, the basic things about going up on increasing volume was like, I thought the same thing. And then I was like, hey, that move went incredibly far on low volume. So one of the reasons we say it's secondary,
Right.
not meaningless, but secondary.
And so, well, we also are always looking at the broader markets, market internals, and then we put that picture and say, this is a high probability trade. We enter with proper position size and then manage it in accordance with our trading plan rules. That's what trading is all about. It's that simple. Let's start with some basics here. And, I've read so many books in the past, and as Greg said in the introduction, a lot of those are misleading unless you put them in the context of the things we just went over on the prior slide. But what is a candlestick? It's showing the open and the close and the high and the low and just color coding the difference between the open and close. So these are called Japanese candlesticks. And I think, Greg, historically, didn't they make these like trading rice or something is how they kept track of it?
Yeah, it's a nice story.
Exactly. Right. So we use the term candle knowledge. They speak to us about how other traders are acting and what they're doing, not only in that individual bar, but in connection with the overall pattern. Now look at these candlesticks over here. I mean, we could give a mini course just on this, and there are so many beautiful, beautiful setups in here, but we're not going to talk about that quite yet. So it's the arrangement of these candles that we're trading a pattern, and that they speak to us about the probability of the stock moving in the intended direction.
So Dan, before you go on to that, I marked a few things, and those of you that have been with us for a while, use it as kind of a pop quiz. What is Greg drawing those lines about? What are they supposed to mean? And Dan says we could do a little MT live on this one chart, but as I just mark off these areas, those of you that have watched MT lives and especially have taken our courses, you should look at this and say, oh, I know why he drew that and why he put that there and what happened to the right of that bar and why the prices turned here. So, and you know what, Janet, you're actually right, but I wasn't thinking about the Head and Shoulders bottom itself. But, the MT live that we did yesterday on bottoms, and some of you think Dan and I are obsessed with bottoms, Dan mostly, but we looked at this pattern so many times. And I constantly was saying it's the same but different to drive home that point. And just to review for some of you that don't know, it was a breakdown and a failure and a deep retracement and bullish price action at resistance, and then it took out the highs and a pullback to minor support, a wide range bar igniting, and a 1, 2, 3. And there's a fabulous amount of information there to review and for it to become second nature, which is what I call a thought process. And we haven't even gotten into relative strength and weakness and multiple time frames, but all of that is relevant to that one chart.
And Greg, I'm diverting a little bit, but it's a very important topic that I just thought of as you were talking there. When we used to do the on-site labs, meet for a week or two, and it's just a crash course. This would be a great chart. I would print for the students, and I would say, you have 15 minutes. I want you to print it, mark up everything you see, and then we're going to spend 30 minutes talking about it afterwards. And so, I said you and I a 1/8 of a second, where as soon as I pulled up this slide, my eye just gravitated over here to the left a bottoming tail, range expansion, bullish 1, 2, 3 continuation. You've got kind of a triple top here, breakout failure. You talked about this one already. You have a breakout, you have a pullback to support. I have another 1, 2, 3. And you just, that's what trading's all about. So, all right, I get excited talking about charts. All right, this one's you, because you talked about the dark cloud cover.
Yeah, my journey to learn, what we do was a tough one. And it's tough for everybody because we're inundated with so much information that isn't necessary. And we have to kind of like pull ourselves through the mud, so to speak. And so all of these names, which, you're told, you're going to memorize them and know what each one of them means and so on. And it's just not necessary. So when you realize that and you free, that brain, that processor up to recognize individual candles and apply, what I've coined bar by bar analysis, it doesn't matter what you call it. You know what it is. And so, it's, this isn't whatever that individual candle is, a narrow bar, a big bar, a green bar, a topping tail bar, a bottoming tail bar. And then you combine that information. I mean, it could turn into any of these. And you know what? If you want to, you can make up your own names.
I like that. So just another beginning slide here showing you what a candlestick is. And then on this next slide, look, Greg, you're going to like my little tug of war.
I love your pictures, Dan.
But it's a great memory aid. So what's a candlestick? I defined it a moment ago, but it's showed that the opening price, the bottom of the real body. The real body is what the color is. It's the difference between the open and the close. But the candlestick, the bar, is not completed yet, right? Every one of these bars are on whatever time frame you're looking at. Are you looking at a 2-minute chart, a daily, weekly, monthly? And then these bars are going to be moving around until the time period expires. And then it shows the high and the low. So look at the heading here. They visually show the battle of anything that moves on that time frame. So anytime we see a green real body, by definition, the bulls win because it closed above the opening price. Bears win when it's red because it closed below the opening price. Now, that is not an action sign. We're layering concepts here with you. So let's keep layering. Greg, you actually said this exact comment today in the green trading room. I think you might have been talking about IYT or something. But yeah, so why don't you start and I'll add with my little icon.
So this slide is meant to simplify the idea of candlesticks and using them. And so when we hear about things like spinning tops and darling dojis and other dojis that are supposed to be negative and all of that, of course, that produces thoughts, which then creates beliefs. And it may or may not be true, depending on how things are moving. So to simplify things, let's just start with momentum increasing or decreasing. So if I see a big green candle and what preceded it was smaller ones, momentum increased. Now, is that a reason to act on it? No, there's so much more. Is it going up, down, or sideways? What's to the left? And so a topping tail bar, that's what we call them, a topping tail bar. It's a small candle body with a big wick. So it went up and it came all the way back down. We're really talking about retracements. And then again, putting that in the context of, is it going up, down, or sideways, and what's to the left? But what we do know, without a doubt, right, we try and make as much as we can, black and white with technical analysis, which is difficult because there's always seems to be always some kind of gray area there. So to say that this is just a slowing momentum candle related to what preceded it is black and white. It failed up at the high and came back down, but that doesn't mean it's going to continue to fail. So we have other concepts. It was in the middle of the range, slowing momentum. It's got tails on the top and the bottom. This one's got a tail on the bottom, but it's still a small candle body. This one's just a small candle range. All of them tell us that momentum is slowing. And sometimes, especially in this current market environment, we get to see all of this, right, on a day-to-day basis, because that's what's been going on. It's been, kind of directionless and bouncing back and forth. And it's the same thing on the downside. Big red candle says lower, slowing momentum candle. And so as we've looked at all of these candles in relation, the green ones in relation to the big one, and the red ones in relation to the red one, they all combined to give us messages as to the potential for follow through of the momentum candle or the red candle or the lack thereof.
Yeah. And so just the story on my little tug of war picture over here. Think of every single candle, remember, in the time frame that you're trading. This is exactly what's going on between the bulls and the bears. So as soon as the referee says go, that's the opening price. Then the bulls are winning, the bears are winning, and okay, the game is still going on. And where it's when the bar ends, where are you all at? That's the closing price. So I'll just give you one example right here. At the high penny of this bar, this was a big green bar, so the bulls were in total control again. And then the bears looked at each other and said, are you going to let this happen? Let's get our act together. And so then they pulled the bulls back 80% all the way back. So the bulls still won the game because it's green, but they recovered 80% of the strength. So that tells us a message that we're going to want to use now in connection with the overall pattern. So wide range bars, we said, is it a wide? It doesn't mean, well, it means what it means, which is range expansion. It means it's a bullish bar relative to the others. In terms of a trading opportunity, I don't know. Is it one starting from a consolidation that's breaking out? Is it one what we call ending a move after the issue is already up 10 bars? And narrow range is just narrow range. Whenever you see these tails, just as I explained in the last slide, that means sellers are starting to take control because the bulls were in control and they got whacked. This one, it not only did they get whacked to the starting line, the bears won before the bar closed. This is a concept Greg was talking about this morning. So the bulls are in total control here. Higher high, higher low, whatever time frame, it opened here and closed here. There's not even any tails. There's no, overlapping bars. This is a picture of amazing strength. So you see one red bar. Hey, you know what, Greg, this chart reminds me of is Mara. When we look at real charts, folks, which we do in every episode, this reminds me of, this is a great example of Mara. It got extended and people were saying, hey, can we short it then? I'm like, no, it's too strong. You don't have any signs of reversal yet. So that's what we're showing you here now, that the start of a turn is going to happen on a smaller time frame. These are all pictures of starting reversals. And there's different pictures of what we call potency of that reversal. So this one on the left right here, which is a daily chart still, that's not a potent reversal. At least this one gapped up and the selling happened immediately. This middle one, it took out the high and then closed below the prior bar. This one is what we call a bear 180 reversal. This one's also a bear 180 reversal, but with another bar in the middle, which is more resistance. So this is a much more potent reversal if you're going to want to try to fade something like this. But yeah, we'll look at Mari later. I love showing this slide in whatever MT Live we're talking about, because I'm not showing you, the trend, support, anything. These are all individually bullish setups, every single one of these. And pictures like this should be in your trading plan of what I call them animals. I mean, what animals do you have a license to go hunt? And then it's just a matter of going to the marketplace and looking for these and following your trading plan. So this is a pullback in an uptrend. This is what we call red bar ignored, breakdown failure, kind of a downside shakeout. Double bottoms are fantastic. I mentioned the bullish 1, 2, 3 on that first slide, the bullish 180 reversal. But Greg, I love this title the most, so why don't you explain that one?
Yeah, the idea there, it comes back to names are relevant and understanding individual candles as explained, and then bar by bar analysis is, hey, looking like that or looking like this means exactly the same. It went down and it went back up again. This idea here from MTS is the concept calling the transition from red to green. So the buy setup here, right? So take that away, the transition here. But one of the struggles that you're going to have, right? There are many struggles to understanding this technical analysis in candlesticks. And I certainly did. I didn't avoid any of it. Was that which picture am I trading? And once you learn a particular pattern, you're looking for that picture. And so at that point, you start looking at multiple time frames and you get confused. And so here is to drive home the point, whatever you call it, it says it's going up. Now, of course, is it in an uptrend? Is it in a downtrend? What's to the left? But as it relates to these pictures, let's just understand that all of these pictures are communicating the probability of going up.
Awesome. Let's now look at a bunch of examples before we turn it over to real charts. A lot of mess going on, mess, range expansion in a trading range. We got, I'm putting in a square box here. There's no tradable pattern, but we're reading the messages of what's going on. And the messages are, it had a 1, 2, 3 breakout, going sideways for 2 weeks and breaking out. This is, we just showed you on the prior slide, what we call a buy setup. So it broke out, looked to the left. There's, I'm assuming, nothing to the left. It came down. Here's the definition of our buy setup. I have an uptrend, the 20 period moving average above the 50. I can see my red is my 200, so I have a longer term uptrend. So this, in essence, was a multi-month trading range in an uptrend. And now it broke out. And now I have this controlled retracement. It's coming in beautifully. I have my bottoming tail. I have my reversal bar on support. These are the other concepts combined that we started with on the first slide. You buy the high, stop low, and manage in between.
So you know why I drew the red box there, Dan?
I mean, I do, but
it's to communicate, of course, that this candle right there looked like this prior to becoming a bottoming tail bar. So the message changed completely. Now, when this is a red bar, what we're thinking is, well, can that turn into that? Or if it ends this way, can it then turn into this? So the bar by bar analysis will guide you. But the fact that it went down, it's in an uptrend, it's at minor support, the moving averages are in a bullish alignment. You're supposed to get a bullish pattern. Maybe you will, maybe you won't, but that's what we're waiting for. And then, ultimately it has to trigger. But if you understand the bar by bar analysis, as we're talking about here, it doesn't matter what you call it. You're going to know what the message is and what to do afterward.
Another beautiful message here. This was the spiders, and I remember this trade. It was on a 10 o'clock announcement, because 15-minute chart, 2 green bars. This is pre-market, actually. These dotted lines are pre-market. So it was kind of just list in a downtrend. Wide range igniting communicated lower prices. It clawed its way back up over the next hour, broke out, and I got the same buy setup that I just explained right here. But I have the buy setup, like Greg, you said earlier, it's the same but different. This is a beautiful buy setup after a breakdown failure. And it's also, an inverse head and shoulders. Left shoulder and a head and shoulder just means a bullish retracement back to resistance, and then consolidating and breaking out with a price void. Look to the left. So this was just a fantastic no-brainer entry right here. No-brainer for a day trade.
And we would have traded that as a put spread.
Yeah.
If it was a daily chart.
Yeah.
And so time frames, multiple time frames, different vehicles, because I was a mechanic in another lifetime, I like to use the analogy of these patterns and multiple time frames as which tool do I want to go grab, to take advantage of what I'm seeing.
Yeah. Just more example of shocks here. So this was a shock. Why? Well, it's grinding lower and gapped way over resistance. And so we'll apply the other concepts to see how we want to participate if it's a bullish long position. Here, pulled back, reverse. So there's another buy setup. Up multiple bars. This is what we call a breakout failure. It gapped up. This thing's extended now. Look how far it's run. Look at the moving averages. The stock is far from the 20, 20's far from the 50, and it closed with a bearish engulfing bar. So we're talking about candles and patterns. So that star right there, with high degree of certainty, communicates lower prices. We got them the next day, and then what happened? Well, it went sideways for 1, 2, 3, 4, 5 bars. Couldn't, the lower half of this, that's also communicating weakness, relative weakness. I still have what we call the price void. Significant major support is at this star, and then it exceeded it. It went all the way back down to major support here, had a nice little gap breakout here, nice little gap breakout here after the turn. And
so Dan, one second. So if I'm saying this right, Devaros in YouTube is asking if we would do an MT live on a black box chart of bar by bar analysis. We could do that, but you could do it yourself. So if you were to print out this chart anyway, and get a piece of paper and do this. And drag the piece of paper over one bar at a time. There are softwares that allow you to do that. You could click your arrow button, but you could do this yourself and go through the thought process that would start with, is it up, down, or sideways? Is it extended from the 20 MA and price support? Is there anything to the left? What should happen next? Slide. What should happen next? And just go through the analysis and keep sliding it over until you see that you're coming up with analysis that makes sense. Or if something changed dramatically, did I not look to the left? What happened there? Maybe it was multiple time frames, but that's the exercise that you can go through on your own. Once you understand what Dan and I are talking about here, of course, some of the concepts that, well, Dan said, it's staying in the lower half, but that is one of the concepts that of MTS, is that once you get a wide range bar, you want to see the bodies stay in the lower half. The tails can come up. So as you were to see these tails forming and say, oh, it went up and formed a tail, but it closed above the open, but it's still in the lower half. I got another bar. It closed in the middle. It's a slowing momentum bar. If it gets above this high, it might go up. How high? I don't know. I don't have enough information, but it could go up. But if it breaks below the lows, well, it should go down. Go down to where? Look to the left. It's a great exercise that you can do on your own with a piece of paper.
We actually did an MT Live because, some people, they might say, oh, yeah, you guys are really good about talking about, the past, but
Yes.
Show me the present. And I have two answers. One is that's what our green trading room's for. We're trading live every day in there. Number two, we did an MT Live, exactly what you're saying. We would say, you all pick whatever you want. And they would say, Cisco. And we would go back 6 months ago. And we just went bar by bar doing exactly what you just said. Just a breakdown failure. So this is communicating, snap right back, but there's no pattern here yet. And now this is the pattern. This was an ugly reversal. There's still no, we wouldn't act yet. There's nothing to do in this until it had a gap breakout over this ugly red bar. Multi-month consolidation. And remember what we said earlier about while the bar is still open of what the battle is. So this gapped up, and notice that there's no tail on it. So that is saying it couldn't even retrace into the gap. So that is a beautiful pro gap, we call it, breakout. Sideways trend to uptrend. And then it would be on our gap list in the morning in the green trading room. We would put it on a 5-minute chart, thumbnail we call it. And if it sets up one of these pictures here on a 5-minute chart, we are buying that stock and options. And that's the process we go through. Another one here, just nasty gap down, couldn't bounce. And I'm giving you the symbol on purpose because this was one of these movie theater ticket companies. Just bearish price action, bearish downtrend. There's I don't even see barely 2 green bars in a row, couldn't retrace. This is a death trend. And I am highlighting the volume here because that even though this stock went from $1,100 down to 21 right here, look at the volume right here. That is just being liquidated. And in the bottom left here, look at this. This is 1 penny, 0.0102. This went out of business. And you know what, Greg? How many bottom fishers do you think there were in here? Well, the answer is you got to look at the volume for the day. every purchase that you have to have an equal sell. But that, that was nasty. Here's kind of another shock pattern. The message at the open of the day was ugly, but a gap to support. Still, there's nothing to do yet. I don't know what this is going to do in the first 30 minutes, but on an intraday time frame, this first 15-minute bar sliced back through resistance and negated the gap. So the message of that is very bullish. And then we got a breakout the next day on that. Breakout failure. And that, you know what, this is to show you that, of course, we get caught in patterns that fail. It could be gaps. It could just be breakout failure. And Greg, recently, as you know, we did an MT Live also on trading failed patterns, shock patterns. And we say, look, you need to understand what we're talking about today, candlesticks, etc., to know when you're in a potential danger, Will Robinson. The bars are telling me something's not acting right. So yeah, we actually were in this trade over the high of this green bar. And then the candlestick is telling me at the close, danger, this shouldn't have closed like that after a continuation breakout.
Dan, we show all of these things, and like you said, it's easy for someone to say, in hindsight, what you're pointing out, and it's true. So, we got a lot of people here and in YouTube, and so I want to share, it was live in the trading room today. I said I shorted the Dow futures, and I'll show you the chart when we're done with this. This is the biggest, ugliest red bar on a 5-minute chart that we could show you, and we would all, and if I covered it up with the paper, we'd say, what do you think's going to happen here? 99% would say it's going down.
Right.
It initially did, and then it went up. And that's what stop losses are about, because there are things going on, different markets, and when you can't know everything. It's just not impossible. We wish we could, because we think that we could save ourselves from losing any money, but we can't know everything that's going on. So we have stop losses and calculated risk, and it didn't follow through. So I was out, and so we could take a look at it later, but just wanted to share that there are times that, like Dan is saying, we were in that trade and it failed. So we get out. It happens.
And many times we might even reverse and, set up as a new trade. I'm just going to show you one or two what we call credit spreads, where we're still applying the identical information that we're going over today. But instead of buying or shorting the issue, we're going to sell a put spread. So what a put spread is we're going to, this green line, everything we do starts with a pattern. We're going to sell a put option under support. And so we get paid that premium from the option buyer. And then we're going to take part of that money and buy further out of the money put. So that's what's called a bull put credit spread. And we do them with great accuracy with our patterns. The difference of that is the credit that is immediately deposited into your brokerage account. It's yours to keep as long as it expires. Well, it's yours to keep, period. But you have legal obligations for it. You have a legal obligation to buy the stock at the strike price on or before expiration if the put buyer wants you to buy it. But the put buyer is not going to make you buy it if it expires worthless. And then we apply that now to a compelling pattern. This was a while ago. Facebook here, the FTC was coming after them, and it fell 12.9% in 2 days. So I just showed you the picture right over here on the left. This is what we call a beautiful W bottom. Here it is. look how, I mean, this thing just got cratered. So we just sit back and wait for one of those pictures. Here, bottoming tails moved up, come back. I got a retest. Today we're talking about candles. This wide range bar right here on a double bottom, we sold this added money put spread. So the stock's support here is 162. We still went down $7 more. And we said we took in 56 cents a share, 3 days of risk, and we make 7.5%. The stock could fall 6% lower, and you still keep the money with these patterns we teach. Another quick 2 examples here. Tesla, we just did this one last Friday. This was the closing price. This was the prior day. And excuse me. So it gapped up, and this is our intraday chart. So this ugly fall closing at the low is this red bar. And I said, Greg, in the green trading room, because people wanted to short this. And I said, you know what? This was on a Thursday. I said, you know what? Just like you said to that earlier example, Greg, what if it does X? What would you be thinking? So I said in the green trading room on Thursday, I said, what if it were to open above these tails? What would you all think? And I said,
I remember you calling the trade, and initially I thought, that's not one of Dan's typicals, but I like it.
well, it
And,
was zero.
I mean, the strike was far enough away.
Yeah, it was 0 DTE. It had a bull bit. These dotted lines are pre-market. Look, it gapped over these tails, little, kind of bull flag consolidation. And I didn't do it until this first 15-minute bar closed, right? So today we've been talking about bars, right? So what did this bar do? It went down in the morning, took out the pre-market low, sliced through resistance, closing above the pre-market resistance, and I have a price point. So we sold the $565 puts, we bought the 545s, took in 80 cents a share. Our risk is just for a couple hours, as long as it stays. So look, right, the 15-minute high, Greg, was, let's call it 586. So we had $21 of cushion for a couple days. For a couple hours.
That's the lines that I drew. I know it's probably too high for 556, but that's the idea.
Yeah, it was under the low.
Credit spread.
Yeah, it was under the low. Just one more.
So that was, there was Rohit's question in YouTube was, what should be the ideal difference between short strike and the long strike for a call spread?
As a swing trade, our kind of go-to standard is $5 or $10 on 0 DTE day. Rohit, I go as far out as I can to get the biggest amount of credit that I want. I wouldn't go $100 wide on this because that would eat a lot of buying power and the extra premium net credit. This one I got 80 cents, and going out $100, you may only get maybe 95 cents. So it's not worth it. But that's the answer. When we do 0 DTEs on spiders, I tell people just go down as far as it takes where you're only paying a penny. And the option quotes will then tell you which ones to do. Just another example here when this thing rallied over 700%. Then so it's on my watch list every day. Had a 180 reversal here. We had a failed buy setup. That's where we entered this thing, where we sold out of the money. And so this one, Craig, it was when workforce was like 20 bucks. We sold $10 higher for $1.75. That's, when these things have crazy premium. All right.
So, just to simplify, credit spreads are one of the most simple strategies that there is when you understand the price patterns. Like, so with that example and seeing how it went from $2, $3 to $20, and say, what's the probability of this thing going up another $10 in a very short period of time? Anything's possible, but is it probable? Not likely. So the idea behind the spread is, okay, it won't go there. It's pretty simple.
Right. And management.
The management is a little, when things start to move in the direction you don't want, management could be a little, it wouldn't be tricky. You just have to be very defensive and sometimes a little bit too so, but that's just the nature of the instrument, the vehicle.
Yeah. Yeah. I mean, we closed 3 credit spreads this morning, UPS and Coin and Snow. We just took our money. When we go to live charts here in 2 minutes, you'll see Greg pull this up, and this is what we use for scanning based on what do you want to look for. But we're pattern traders, obviously. So look at these titles. We've talked about some of them today. A wide range bar on the daily, 180 reversal, bottoming tail, gap up on volume. And this is more of a range bound thing, gap above a red bar. So you see Greg created all these as his assistant, saying, give me these. I'll look at them individually. I got some sorting columns here, and then I'll pick the ones that meet my trading plan.
And sorting those columns are helpful as well. They're all set up that way today because this is an older capture of it. But certain things, like you can see in the gap, you can see if there are 3 check marks there after, it's trading 5 minutes, those are go-to. And of course, looking at the volume, which is one of the columns in there. So, learning how to use these things, we can go over it in the room, but, I've set them up. Scans are all about narrowing down the focus to where you want, what you're looking for. So that's what they do. And then you cherry pick them.
Yeah. Everything we've ever talked about in here, the concepts, the bars, putting everything together, that's what Greg's amazing swing trading course is about. So it's all those concepts, he puts them together in the thought building modules. So then at the end, you hear me say, you have the conscious competence to trade anything that moves. And then it's up to you now to do it slowly, go through the checklist and get seasoning. And he covers position management, trading journals, all kinds of
trader psychology.
Yeah, it's amazing.
It's far more in depth than just thinking, what is a swing trade?
Right. Everything. Well, Greg, you tell them, because people want to focus on the patterns, the excitement. They don't, they hear, money management, it's not as sexy.
Yeah. So part of our conversation in the green room today, one of the things we talked about was checklists and pilots having checklists and how you use checklists. And so the conversation evolved, and it was kind of in a spontaneous thing that, we have all these thought building lessons that are part of MTS, which we've been talking about here. And so where does, money management come in? Well, in one of the ways it teaches you how to really exploit a move to its maximum gain by how to add to the position. But from a safety factor, it's like your parachute, because trades don't all work if you don't understand money management. And we talk a lot because the market is so directionless about even, stops twice as big and smaller positions, and learning how to do all of that is of enormous value. So the money management course is just amazing. goes so far beyond basic money management, but it starts there and explaining the math behind it. So it's just a fabulous course. And when you sign up for the swing trading course, which does cover some money management, but not to the depth of a whole course, which is what this is, you can get it at 50% off.
Yeah, and then also this was a special that we're just extending. You can get 30% off the directional course, which is patterns but trading options instead of stock. This page here,
yeah, the education overview page. You can go to that and browse around.
right? Everything starts with what are your goals? We're not going to push something down your throat. Tell me what your needs are, and then we'll put you down the right path. All right, let's take a look at the real charts here and answer some questions.
All right, so this was my failed trade this morning, and I had a slight profit in it initially, and John had said, how about a session on getting out of a trade with a profit, and when it turned into a loss? Well, I did that this morning, and here was the setup where it broke out, it came back in, it tried to go up and formed a topping tail. It gapped higher and it came down again. And so I had gotten in the trade short. There's a tradable void. Well, this should go all the way down. And of course, my stop was up here, up above here, giving it ample room, looking to add to the position. And then when I saw this bar where it was rejected from there and closed on the low, I'm like, okay, here come the Benjamins. This thing's going to go through here and keep going. And it didn't. It meandered around, and then it went back up. And one of those situations, I like to say, it went up because it didn't go down. And so I got stopped out, for calculable loss. And so, it eventually failed with a breakout failure, but here we're doing MT live, and here it's up at the top of the range. So it just wasn't ready to fail at the time. So there's a setup where it's such a potent bar, it just didn't follow through. Well, to share that.
All right.
SFIX. Let's go to the daily chart. So there's a little short-term extended, Miguel. And you didn't say, how you're looking at this from a swing trade or a day trade. Just throwing out a symbol doesn't tell me, for Dan, what you're looking to do. But it had a nice run and it gapped up, kind of what is called an exhaustion gap. And it gapped up into this resistance over here. So it's a watch type of situation to see if it fills the gap, if it goes sideways. It's certainly not something to enter at this point. See down here where it retraced all the way to the support and then formed this reversal. If you saw that weekly chart, you put that on your watch list and then go down to the smaller time frame and applying what we talked about here: gap reversal, top of the wide range bar, sideways, gap reversal. So that, multiple time frames is a whole nother MT live subject, but that is one of the ways that you could use multiple time frames. Thomas asking about Piton. Just messy, Thomas. Had this nice move and buyers at minor support, pops back up, gets rejected. A weekly chart. I'm not sure what to do with that at this point, other than probably just to stay away. And again, you didn't mention intraday or swing, but there's the weekly and daily time frames. And I would just watch it and see if it continues to go sideways and build support.
Hey, Greg, why don't you show Michael Jackson, MJ, since that's the marijuana ETF, and we we've been nibbling in marijuana stocks recently. This Tilray.
And another bottoming pattern. It tried to bottom here, but it was early. And then here again. And I think we got stopped out of that one, Dan. We did that one there.
It was right.
And then,
it was a beautiful setup. Yeah.
Right. And now here it is again, where red bar ignored, wide range bar. It's taken out the high, and let's see what it does.
Yeah.
Let's see. Trevor has Microsoft, which has been showing relative strength compared to some others. Coming into this week, everything looked like it was ready to take off, and maybe it will yet. I mean, in pre-market, I explained about these option open interests. You can take a look at that on YouTube, how the markets are just kind of stuck here. But coming into the week, we had a lot of these reversal patterns in tech. The tech ETF and everything looked like it was going to go, and it's just kind of been stuck in the mud. So I think maybe tomorrow, if it closes this way and we get a red bar ignored above the high, that could certainly be a go.
Yeah.
I don't want to miss anyone. Spiders, SPY. Again, Bernard, watch my MT Live pre-market this morning explaining about SPY. I think it'll really turn on some light bulbs. Go ahead, Dan.
Well, and also you can mention IYT then.
Yeah, IYT. We're going to wait to see what it does. I don't have the 50 MA here, but it tagged the 50-day moving average, which is right at the bottom. Here it's making these lower highs, and it's right at the bottom of the range. It actually tickled just underneath it a little bit. So, this is something to keep an eye on to see if, the transports continue to deteriorate here. It's, historically, they can do that for a while, but it's like a heads up that the market is becoming, more bearish. And we did get our internals giving us a sell signal alert last week.
And Tej asked about MAN, M-A-N.
Where's this one?
Right.
So this is a wide range bar ending. And this is more of a wide range bar igniting after the turn. Took out the high, which is bullish. It consolidated, which was bullish. But, it's starting to become like a breakout failure there. So a little getting tired. Which one, Dan?
MAN, M-A-N. Yeah, party looks great. We entered that today.
So this is a bottoming pattern in an uptrend. We looked at lots of bottoming patterns last week that were in downtrends. This one's a bottoming pattern. Looked like it was going to go down. It went down. It came right back up again. Looked like it was going to go down. It didn't. So yesterday's wide range bar. So it's bullish price action, which now tells me look to the left. Is there something there? It's a long time away. Nothing of real significance. So the theory would be if it could take out these highs, it should go up. So definitely keep an eye on that.
I'm having them sell a third of your party right now, PRTY.
Yeah.
And you can show them the bar. That was your find.
That was yesterday, and it was in the wide range bar scan. By the way, when you take the course, you join the green room. We give you the scans. If you have to subscribe to TC 2000, but that is part of your membership with Master Trader, which is you don't see scans here, but this page, it'll switch. This page has many scans. You see across the top here, bottoming tail, pullbacks to moving averages, 1, 2, 3 patterns, wide range bars. You just click on it, right? And it puts you in the ballpark. Weeklies, weekly bearish, and so on. There's another one in here. We look at the options. Sideways, strong, near 52-week highs, near 52-week lows. And then we also provide everyone with, again, it showed the gap scans. So gapping down, gapping up, gapping above a green bar, a red bar. So you'll never be, for a lack of ideas, if anything, you'll have too many, and you're, again, narrowing it down not to get overloaded with too much information. Party manual. Let's go back to the other layout. Makes it easier to see everything. RBLX. It's in an uptrend. I don't know that it really is pulled back enough. It's strong. It doesn't have something that just jumps out at me that
Well, what
it's got
jumped
the
out?
reversal.
The
What
gap,
then?
the gap breakout is what jumped out at me. No, a
This?
couple weeks ago. The gap at $76. There.
Oh, down here.
Yeah.
Right. Right. So that got it going. But at this point, it isn't a no-brainer entry,
Yeah.
even though it's got a reversal here. I would want to see something more. EX, a couple more. So there's a bottoming pattern.
Sure.
It's different,
Foot spread.
but it's in the right area. Right? It's down here. It's in the right area to be making a bottom. It's got a whole bunch of bottoming tail bars. It is a biotech. Be careful. You can see earnings are not until August, so that's okay. But biotechs are susceptible to news. It's got some resistance there, so it's an early bottoming pattern.
Greg, look at Riot. You mentioned yesterday it was bottoming.
I mentioned Riot. Really, I mentioned it here. I thought it would get going after this reversal, and it didn't. And then yesterday got the bottoming tail bar. So it looks like, it's a bottoming pattern. It's recovering now and starting to move back up, and it does have room to go. So I will keep an eye on this now. It's a little extended intraday, and we'll see how it retraces or what it does. But I like that. Well, Jacob, I thought Jacob was giving me love. He wants us to look at love. Daily chart. Let's go to daily chart. I don't know with this, Jacob. This, I don't know if it's a bad tick. Let's look at an hourly chart. Maybe it isn't. That's crazy price action. I might be willing to do this if it consolidated here at the top of the hourly bar and then started to move up. But I'm not sure. I'm skeptical that it's ready to move up because of this price action that occurred there. But it's in an uptrend. You got to give that the benefit of the doubt. I liked today's red bar being ignored, that 180 type of reversal. I would wait till a little later in the day or even tomorrow. Maybe if tomorrow you get an inside day, and that might be enough consolidation to put on an entry.
All right, awesome.
All right. So I hope you guys enjoyed this. We covered lots of stuff. Hope we brought clarity. That was the promise for the candlestick here in bar by bar analysis. And till next week, we'll be back. Have a good one.
Good trading, everyone.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.